Hey guys, welcome back to another video, and a lot of you have been asking about ways to use the tools. We're going through a difficult time in the stock market right now. We just finished the first half of 2022, and it was the worst performance of the S&P in the last 52 years, and it has affected the index trading system's default setting, which hasn't been doing as well as it should be. So some of you have been looking for some other opportunities, and so today I'd like to take that time in this video and go over one of my favorite tools, which is available to all the subscribers, the Settings Monitor. Now, before I go into how to pick a setting, just imagine each of these settings as a mutual fund that you would see at your JP Morgan or Fidelity or any of these other institutions. If you have a 401k or an IRA, you've probably looked at the mutual funds to invest in them, and they will list their mutual funds just like our settings are listed. You get the 3-month, the 1 year, the 3-year, the 5-year return. And it helps you to see which mutual funds are doing well and which ones aren't. So we apply the same thing here at the index trading system for which of our settings are working and which aren't. So the first thing I'm going to do is explain my observations on this tool, what I've seen in the past, how it should be behaving, and then after we figure out how it works, I'm going to show you how to apply that and maybe pick some winning settings for you to make some money while you're with the index trading system here. All right, so let's get started. First off, we're divided into bullish and bearish settings. There's 18 of each. Now, in a typical, what I'm going to call a healthy market, whether it's a healthy bear market or a healthy bull market, if it was a bull market, we would see all the settings over here in green, and we would see all these in a red. Okay, and then in a bear market, you should see these in green and these in red. Now, there is one exception. In a bull market, it usually lasts 7 to 10 years. So it's common for these to all be in the green because we have 5 years return, and a bull market is 10 years, so you got plenty of returns there. Now, a bear market, on the other hand, is usually like 1.5, maybe 3 years. So it's very rare that you would see green in the 5-year column. So even in a healthy bear market, all 3 of these columns should be in the green. So I'm not saying that all 4 of them, because there is an exception, because it's very rare to have a bear market that's more than 5 years for any sorts of results to come up into here. All right, so that's how it typically works. And then there's a couple of tips, because are going to be important later, about the setting itself. So this is how the colors here work, the red and the green and back and forth. Now, 2-0 is usually an indicator that the market is going to a bear market. For some reason in the past, it starts to take off first before the other settings. So we use that as an indicator, especially with our major trend indicator, of when a bear market is coming. So that's important to know, this 2-0. And then you have these settings that are down in the 2s. Now the 2s don't normally do as well, and the reason being is that when the 2 on the right side is how big of a swing in the market. So these have to have big swings in the market, and usually big swings occur when we are going into a transition, like a bear market starting, or we're at the bottom of a bear market and now a bull market. You'll start seeing this wild volatility, and then the 2s begin to start taking shape. And of course, in the market, the volatility eventually dies down, and then it goes back to normal ups and downs. And so the 2s will eventually go back and not do as well as the other settings. So you want to keep that in mind. And what I have found is that when a 2s start doing well, then that means this other table. So if the 2s on the bullish table were doing well, then that means possibly a bear market is coming. So we could go over and maybe predict the future and use a bear setting, and vice versa. If we start seeing the 2s and the bear doing, then the bull one should be doing well. So we're here on the Russell, and just from what I explained, let's just take a general overview of the market itself before we even try to find us a winner. All right, so let's take a look. So if we look at this, the general market, especially on the Russell here, we can see some green over here on the bearish side, and this is for, you know, the 1, 2, all the zeros and a couple of the ones. So the really small volatility seems to be doing well on the Russell over here. So a bearish setting. And then we come down here, we don't have anything over here. So yeah, that's not, but we do have a little bit over here, but not much. So we don't see too much at all, and it's kind of spread out. It's kind of spread out up here and then spread out down over here. All right, now let's go take a look at the NASDAQ. We'll click on that one. And as we look at this, the bearish settings just haven't been doing very well at all, and we do have a concentration of green down in here. So more than likely, using TQQ, SQQ, and using some of these two settings and the ones here. Oh, remember what I just said about twos predicting the other side? So if we look at the twos here, you can see that a few of them have a nice 1-year return, but not as many have a 3 month. So they seem to have pooped out, and then we come over here and look, and yes, we have a couple in the green for the last 3 months. So it kind of shifted from here and went over here. So this 4-2 died out, it picked up over here. So it shifted, as we were talking about before. But anyway, let's get back to our overall assessment. And so again, we see things are a little bit split. There really is no clear decision. And now, if you're a premium subscriber, we do have the major trend down here, and you can come and use that as another determination. We have two major trends up here. This one is in a bear, and this one's in a bull. So even the major trend is conflicted. And if you look at these, you can see that from this period and these, you know, many times they're in the same thing together, but they have been conflicted since April 11th. We're now at 6, or time I'm doing this is 7/3. So we're looking at, yeah, over almost 3 months later, it's been very conflicting these last 3 months, and therefore on this settings monitor, we're seeing things that are back. So this makes it a very challenging market to pick a winner. So now let's get down to picking a winner now that we know a little bit about how to use this tool. Now, the first thing that I like to look for, and this is my #1 rule, is to look at a setting that is all in the green and it has a descending pattern. So that means every period is a winner. So if we look over here, it's high, getting lower, but then this last month it went bigger. And so that means that if it wasn't for the last 3 months, this one would be a loser for the past year. And also, remember what I said about 2-0. When 2-0 starts to take off, that means the bearish settings will be taking off sooner or later, and you can see that 2-0 is starting to take off. So what we're looking at on this one right here, now that the 2-0 is taking off, it could be a possibility, a prediction that the 3-1 should be taken off pretty soon. So we may not want to abandon our default 3-1 setting. You can always hedge it, keep this one, start a second portfolio if you find something else on here that's really good. All right, so that one's an interesting one, and it's also possible, as this bear market goes, that this 2-0 could take off even more before the 3-1 does. So, you know, just because it's done good the last 3 months doesn't mean that this is a sure thing. This one could start taking off for another 3 months before the 3-1 kicks in. So you could do maybe half and half, you see, do like a 2-0 and a 3-1, and that way you're kind of protected. And as the 2-0 starts to die down, you move the funds into the 3-1. You know, maybe there's an idea. All right, so so that's what we have here. So this one didn't quite qualify, and as you see, none of these do on here. But here's an exception that I would throw in, and that's the 6-0. As you see, it has a beautiful period at where it's descending. The only where it's not is in the 5 years. And I've mentioned before, that's okay, that's acceptable, because, you know, bear markets shouldn't be 5 years. You shouldn't be seeing green in this 5-year return. That just means our market has really been struggling for quite some time now to find some real true direction. And so you can probably throw that one out, and now you have a 3-er right here. So it could be a 6-0. But before I would jump on this, I'd like to examine a little bit more about my setting. And one way to do that is to just click on this setting, and it'll bring up the last 3 months. Now what I want to do is I pretty much look at the drawdown. I want to see how this setting has been behaving, and then we can see if it's worth getting in on. So we can see, as expected, because it just started, this new high is based on a starting date of April 1st, not on this whole TNA's career or the portfolio's career. Is just starting right here at this time. So this portfolio of $1,000, this fictitious portfolio, it had gone up the very first day, so that was a new high, and then afterwards it went down. It went down to a -16, and then it came back to a new high. So it didn't trigger a drawdown because that's a -17. So, you know, that's a pretty strong signal. And then it went on to a few more highs, took a little break down 13, then it came back with a whole bunch more highs. This one's been doing beautiful. And then it came over here, went down -10, -11, back to new highs. So it was performing, and now all of a sudden, boom, down 31%, now down 32, it was at 34. So it's just not acting the same as it was. So now this one's run of 3 years could be over, so it's questionable. If I was looking for something to start today, I might skip on this one right here if there's nothing better. Let's just skip on this one. Alright, so anyway, let's go back to the settings monitor. 6-0 is a possibility, but I don't really like it. Let's see if there's anything else out there available. Now again, if we look over here, we can see where this one has kind of messed up. So yeah, it's not a possibility. You know, so that one also, like the 6-0, is an if. Let's take a look at it just to see. It's just an if. See how it's been behaving. You can see here it went down -24, -37, -41, and then it came all the way back to a new high. That's amazing. That is a really, really strong setting. Then it's gone on to a whole bunch of more new highs, and now it's had a little bit of a pullback. Yeah, you know, this one looks really good too. I mean, but like I say, it 6022, they're iffy. Again, if you don't find anything else, you know, maybe you could do a hedge and do both, you know, with TNA, TZA, do the 6-0 and do the 2-2 over here. Well, let's go take a look at the NASDAQ and see if we can find something. Again, nothing over here. Here's one that has all green, but if it wasn't for the last 3 months, it would be in the red. So that one just seems to have got lucky the last 3 months out of the 5 years. So we skip that one. And then we have this one, and if we look here, ding, 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 looks like we found a winner. As you see, it has that descending pattern. Okay, so that is actually the only one. So let's take a look at this. We're going to click on this return of 9.69%. And again, just like the 2-2 was with TZA, TNA went up to a new high. Now this one here took a big beat. Look at this, 29, 35, 43, 47, 48, 49. Down 50%. Holy moly. This one took a really big beat, and then look at that. Boom, back to a new high. So another thing I like to look at is when it's down 50%, we're right here on 524.22. It's back to a new high in 1 month. Whoa, if you would have got in a month ago, you would have made a double your money on that one. So this one looks like back on 524 it just took off, and as you see, it's just been heading straight up since. So wow, that's amazing performance. Is it over, or is there more to go? So definitely I would say that this 2-2 with TQQ SQQ would be my top choice, and as doing something off of this index trading system here. Because remember, what I've been showing you here, I'm showing you when to get in, but I'm not showing you when to get out. When is that run going to be over? Because we're playing settings that are getting hot, not like our default setting, which just seems to be in the top settings over every single bear and bull period. So we just, you know, buy and hold that one. But this kind of strategy, you need to constantly be checking. How often are you going to check? Once a week? every 2 weeks, every month, and then you adjust. So you're going to have to fine tune and figure that out. But sometimes there's those hit and run plays where something is just doing fantastic that you want to get in on it and maybe ride it just for a week or two and then get out. And when we look at that, we can see 4-2 and 1-1 are the two favorites. And they both kind of do the same thing. But you could, again, come and look on this. This 54%. Let's take a look. We can see that this thing just went straight down 33%. Wow, this was down 33%, 36, and on 429, and within 2 weeks it was back to a new high. That's a powerful signal. Then it went on to make another new high, and then it went down 20. It zoomed right back up, a bunch of new highs. I mean, this one, whew, this one seems to be on a roll also. But like I say, it may not last long. So this could be one that you want to play also. So as you see, these things have the resilience and the strength. And let me just show you this to something that maybe is a little bit different, okay? So let's come over here and let's take the 3-1 over here, for example. Okay, it's starting off with a new high. And as you can see, it started its drawdown on 426, and it's now down 40%. It has never had a nice decent raise back up, nothing back down. It's over 2 months later, and it's just doing nothing. So I don't know if you've ever been a horse racing handicapper. You don't want to be on that horse that's doing nothing. You know, if a horse starts way behind and zooms up like some of these other settings, that's perfectly fine, but you don't want to be in these horses that fall behind and just have nothing to come back. So that's how I kind of look at it, by looking at those drawdowns. And so on that one, yeah, you just got to be a little bit careful. And then another thing that you can use for a prediction is when you see a setting that goes up 50% in 3 months, sometimes the next setting in line will take off next. So let's take a look if anything qualifies under that. So this one is plus 48. Maybe it was plus 50. I don't know, but it's not now. Let's go over to the NASDAQ. And you see we have 2 winners. Okay, so we have the 1-1 and we have the 5-2. Now, without looking at anything else, you know I don't like the 2s, so I would probably go with the 1-1. But let's take a closer in-depth look. Here's what's going to happen. The next setting in succession should take off. So the next one past 1-1 is 2-1. Now, if we were down at 6-1, it would not go to 1-2. It would start over back at 1-1. And actually, I only like to use the 1, 2, 3s, and 4s for this. I kind of skip the 5s and 6s. So when you get to a 4-1, you just go back to the 1-1, okay? So now we're at a 1-1. So this is telling me maybe the 2-1 is going to take off next. So you could play the bullish 2-1 on the NASDAQ here. Let's take a look and see if it is a decent setting. So it started off a little bit, made a couple of new highs. Then it decided to just crater down 32%, 33, 30%, 38. And then it came all the way back to 4, didn't quite make it, dropped, and it's been struggling, and now it's dropped, and now it's just sitting out in cash. So, yeah, this one might have already had its big move, and maybe it's over. So, yeah, I don't know. Could be this one is due back, but as you see, it's stopped out, and who knows when it's going to start again. And by then, there could be the previous setting is no longer minus 50, you see, and so therefore this one won't qualify. So, yeah, so nothing there. Okay, so there you go. There you have some ideas. I hope I didn't overblow your brain on this. Some ideas of the Russell and the NASDAQ ETFs. Using, you know, the settings monitor only. I'm going to make some other videos with some of the other tools and show you ways to find some trades, but hopefully you find some good ideas here. But as a recap here, again, I like this 2-2 on the TQQ, SQQ. So that one is in the downside. And I also like this 6-0 over here with the Russell, the bearish 6-0. So if you were even to do both, you know, even though they're in opposite directions of the market, they're in opposite ETFs. So it's possible that the Russell will go up while the NASDAQ goes down, and both of yours are winners, even though they're in opposite directions. So that seems like an interesting play. And if I had only one to choose, maybe the 2-2 with the NASDAQ had some extra money, wanted to do 2, might throw in this 6-0 over here. Once you come down with your list of winners and you're ready to get started, we do have, if you're a premium subscriber, sorry, you other basic subscribers, you have to put the setting into your market timing indicator and it'll tell you if the time is right to get started. But if you got the premium subscription, you can come here to the settings gauge and look at all the ones that are in the red, and that means they are a buy. So we'll look at the 2-2. So you see the 2-2 doesn't have a buy. So even though that's my favorite pick, it's sitting in cash right now. So right now you would still sit in cash, no hurry to get started next week, and that's the 2-2. Now we look at the 6-0, and the 6-0 does have a buy. So if you're going to be doing that hedge that I talked about, then you would start half your money, the 6-0, you could start now, and your other one is in cash. And basically the 6-0 is saying the market's going to go up. So you're going to have half your money on the upside. You're sitting in cash starting off the next week. And as a final note, as I close this out here, what I'm showing you is ones to pick. I'm not showing you when to get out. So these could be picks for 1 week, a month, 2 months. It could be 3-4 months from now. So there you go. And it's up to you. We'll come back here and we'll look at this video in a few months, and we'll see if all of these ways of trying to find some winners actually produce some winners. So I'll see you all in my next video. Thank you for going through this long video, and here's to your success.